Hi there, Serial Trader here. Let's have a quick look at the major US indices. And there's been enough development here since the last video to do an update. So, do we have a top is the question. And the answer is potentially. There's not that much evidence yet that we've actually peaked out, although it's starting to shape up, so we'll go over that. Now, right now, we've retraced in between the 618 and 786 of this overall down leg from the early December highs to obviously the late December lows. So that's certainly acceptable wave 2 retracement if we do have a 1 down, 2 up of one lesser degree from the previous 1, 2. And now obviously the implication will be that we turn down strongly in a wave 3 of 3 decline, and potentially in the very early stages of that. So I'll delete some of this stuff on the price chart, and I'll actually just, now that we've gone past the 618, I'll just leave the 786 up for now. Alright, now we actually failed just below this previous resistance level here, and that came in at 26.85.44, so we peaked out on Friday there at 26.75.47. So that might have been a nice level to get a reaction from, as it was a previous resistance level. Time will tell if that holds up. Also point out that RSI just got slightly over 60, so 61 and change, and now we're starting to turn back down on that daily RSI. So again, that RSI bear market resistance zone from roughly 50 to 60, that's largely intact still, as long as we do turn down from here essentially. And one thing I want to point out before going into the shorter time frames is, okay, just as we have price relationships and Fibonacci levels to get reactions off of and that sort of thing, there's also time relationships. So I just want to point something out. So if we do this, so if we take the length of this initial move down in October and project it out, the wave 2 peak we had there, the wave 2 peak we had there in early December roughly lined up within 2 days or so of being equal in the time duration as wave 1. So wave 1 consumed a certain amount of time. I think it was a little over a month. And then wave 2 consumed within a couple days an equivalent amount of time, and then we turned down in the subsequent wave 1, right, as it's currently labeled. So we had a nice kind of pattern there of equal time consumed and also appropriate price retracement. And these relationships don't always appear, but it's good to look at when they're there. So now, since we have that 1, 2, let's look at this 1, 2. Is there any relationship here we can kind of determine as far as time goes? So this is the entire length of wave 1 in time. Now we projected that length out here, and you can see to within 1 day or so, this wave 2 up we've had consumed the same amount of time as the wave 1 down that we had. So I thought that was interesting. So showing a little symmetry here between these waves. So, equal time between these two, and now essentially equal time between these two, give or take a day or two, right? Now, there's another time relationship that I noticed, and that's if we take the entire length of wave 1 and 2, so this entire down-up sequence, okay, project that out. Now, the 618 of that amount of time lines up perfectly with, possibly Friday being the top. So again, just to reiterate, the entire length of wave 1 down and wave 2 up, okay, of this degree, projected out forwards from that day, lined up perfectly to the 618. So 61.8% of the amount of time that was consumed by that 1, 2 has now been consumed by this 1, 2. And if that just lines up perfectly to the day and that serves as our top, I think that's a pretty remarkable Fibonacci time relationship. So, I mean, this stuff doesn't always line up like this, but I think it's interesting to point out when it does. Just as there are Fibonacci price relationships, such as, just to throw a very textbook one that we had before. So we did the retracement of wave 1 down, and I believe we had just about a perfect 61.8% price retracement. See that there? So that's a nice example of a Fibonacci price relationship. And what I just showed you before that was a nice example of a Fibonacci time relationship. So when you have things line up like that, and you have a certain wave outlook, sometimes it just complements things. Now that being said, let's dig into is there any evidence on the shorter time frame here that we may have some sort of well, ideally a significant top in place? Well, let's go look. So I had this price channel, so still working this as a WXY up for wave 2, double zigzag. Wave Y is a little, longer in length, and actually it's basically in between the 1.0 relationship and the 1.382 relationship. In fact, it got pretty close to the 1.382 relationship, about 10 points away or so. So that's still acceptable. Obviously, the equality relationship is the most common, but it doesn't mean it has to be the equality relationship or it's wrong. That's not true at all. So I just thought I'd point that out. So WXY up for this wave 2. Now you can see I had this corrective price channel drawn, and we decisively broke out of that. And then if I go in a little closer here on the 15-minute price chart, we decisively broke out of that corrective price channel, came up to test the underside of that price channel that was support. It served as resistance. We turned down again, made a lower low. So now we have our potential high. We have a low, a lower high, a lower low. So far, another lower high. Okay, and I'd also just want to point out, if we just dig in here and do some, maybe I'll do the 5-minute, just for a little more detail. Yeah, that could work here. Okay, so potentially, we could just do a little smaller degree wave labeling here. So maybe a 1 down, 2 up, 3 down, 4 up, and then a nice 5 down, extended 5th wave. So the 3rd wave is longer than the 1st wave, and then the 5th is the extended wave. This is a potential labeling scheme. And, small degree. And then we had, some sort of ABC up. And I'll go ahead and, throw some labels up on that. And just from here, A up, B, C. Now this actually isn't, so it's more like this, because there was a gap here. And there's let me adjust the degree there. Now, if I just, bear with me, since there was a gap overnight in the futures, if you just look at this, this is basically the ABC I'm talking about on the futures chart, and it actually looks quite good. So here we go. A, B, C, and it was actually pretty close to AC equality. Had a nice 3-wave look to it. So anyway, that's the equivalent gap on the futures. Now going back to this chart, so we had ABC up, and then for a larger degree here, this could potentially be the first 1 down, 2 up, and now we're in the middle of a 3, 4 or 5. Let me just adjust this a bit here. Obviously, this has to be 1 higher degree. So minute, and also point out that we did a pretty decent looking fib retracement. So from the lows here. Let's have a look here. Okay, so just about a perfect 618 retracement of this initial move down, which also lined up quite nicely with the bottom of this channel that we broke out of. Former support becoming resistance as far as the channel, lower trend line there. Good 618 relationship. Now, this could be, the development of wave 3. Of that degree, and then we'd obviously bottom somewhere, come up for a 4, go down in 5, and maybe have our first impulse wave down of that large degree. But let's just examine the next down up sequence. Now I won't do the sub labels because that's just going to too small of a degree to be useful for this time frame even, and this is the 5-minute time frame. Now this could easily be another 1, 2, And let me just get these on the chart here. And obviously these would be even a lower degree still, as they're the subdivisions of possibly this, which wave 3 would that be that we're developing here? The subdivisions of minute wave 3. Okay. So I suppose I can go ahead and bump that up to minuet there. Okay. So if we look at that, this could be possibly what's taking place here. So 1 down, 2 up. We come down in 3, come up in 4, go down in 5 for this 3. Then we need that larger 4, and so on and so on. Now, you can see a distinctive, so far, a fairly distinctive 3-wave advance off the bottom. So possibly an ABC up, right? And let's see if we can get some fib relationships. So between A and C, anything here? We're not quite at equality. How about the 618? Yeah, so basically right at the 618 relationship between A and C. And I think we're also at a fairly interesting Fibonacci retracement of this down leg. So roughly around that 618 retracement as well. And if we just throw up our parallel trend channel for this ABC, if that's what we have developing here off the low, you can see we're largely, nicely contained within this parallel trend channel. So we want to see it turn down, break out of the channel, and continue down for this interpretation to gain some traction. But I think on a short-term basis, this is looking pretty good. We finally have some, downtrending action, at least on a smaller time frame. Lower highs and lower lows. Some nice typical Fibonacci retracements. Good structure to it. I like that we're, now using that lower trend line as resistance instead of support. So that's a good early sign of a change. Now I'll go back out to that hourly chart, and you can see it's getting pretty messy there. Tell you what, we're just gonna go. We're done showing that basically. So if we look at this, now this is the bullish alternate count that says we have some sort of major macro low in place at the low of December, and if that's true, then we did a 1, 2, 3, 4, 5 up. That looks complete. Even in this case, looks like the upside is complete for now, and we're due for our corrective retracement into some sort of Fibonacci zone, and of course various fib levels thrown up here. So even just a 382 retracement still gets us down to 2550 or so. 50% retracement gets us closer to 2500, and obviously if you do something more like the 618 or beyond, we're back in the 24s again. So even in this bullish alternate count that labels this as a 5-wave advance off the bottom, we're still working a fairly significant pullback, right? So from a trading perspective, lower seems to be the higher likelihood at this point under either scenario. Okay, so that's probably good for looking at the waves here. Don't want to go too overboard on it. Now, if we go to the thinkorswim candlestick chart, what do we have going on here? So we're right up in this kind of 50-day moving average area. So that's an interesting area to possibly get a reaction from. Over here, we certainly came down from that area as well. Stochastic got nicely into the overbought condition there on this oscillator, and now we are turning down, so it's pointing down now. So early signs there that we've peaked and we're declining using that tool. If we go in real close, we've come down, bounced off the T line yesterday, came down today, basically rejected that T line again, so showing some support at least initially on that daily T line. And we did a doji today. So we had a down day, a doji today. So this doji could either be, a pause in this overall uptrend, finding support on the T line, or the doji could be this, indecision candlestick, upper and lower shadow. And then tomorrow, if we open lower and close lower, get below that T line, or, in subsequent days as the week goes on, that's going to strongly indicate that, okay, we have a pretty significant pivot up here at 2675.47, and that we are, moving down in some sort of downward trend, whether it be a just a pullback to a higher low, or in my more preferred scenario currently, you know, a nice move down to challenge and likely break the December lows. Time will tell. But right now, just focusing on the very short-term action to get some cues from it. So looking for this T-line to get taken out and a nice close below the T-line to gain some more confidence that we have a solid downtrend underway. But still not there yet here, not on the candlestick chart. Certainly watching it carefully. All right, so that's the view there. Now we'll go to the Dow Jones Industrial Average. Don't need to spend too much time on this stuff. So the Dow, similar. Dow is a little relatively stronger today. Nice doji candlestick, tiny real body. So the opening and closing price, you know, very similar there. Long upper and lower shadow, very long lower shadow, basically bouncing off that T-line a couple days here, showing support. The Dow hasn't really convincingly turned down yet on this oscillator, but it's just starting to crack. So watching the Dow carefully. The Dow is actually not too far away from its 200-day simple moving average. In fact, it looks significantly closer to it than SPX does. So can't rule out a pop-up to that on the Dow. Although if the SPX has already begun its downtrend, I think it's unlikely that the Dow defies it in any significant way before joining in. Okay, so that's the Dow. Now we'll look at the NASDAQ composite. And on the NASDAQ composite, I thought this was interesting. So I think I pointed out on Friday, but we'll just go over it again. So on Friday, we came up just to test the upper channel line here that's been in play since we begun our you know, big decline. And we bounced right off that upper channel almost too perfectly. And we're declining. So we came down, tested the T-line, couldn't close below the T-line. Came down again today. But again, on a closing basis, still basically closed at or just above the T-line. So the NASDAQ starting to crack here. Looks a little bit weaker of the three indices. But still no confirmation. We got to get a nice solid close below the T-line and back below this 50-day moving average to start gaining some more bearish confidence. The oscillator is curling down fairly convincingly here from the top. So I'm optimistically pessimistic. How's that sound? Obviously being bearish, many would consider that pessimistic, but I mean, it's really not when you're doing technical analysis and trades based off it. You're just trading the tape, essentially. It doesn't matter whether it's up or down. It just matters if you got a good handle on the direction. So in this case, yes, I am optimistic that we are starting to crack here and we're going to have some sort of more significant decline. Again, too early to tell whether it will just be a corrective pullback and then continuation higher, or you know, a nice move down to new lows. Okay, but from a trading perspective, just to update, so I haven't added to my SPY March 260 puts. The ones I added before, those are still in play. I haven't added to my VIX calls. Those are still in play, the February VIX calls. I will be looking at adding to some bearish positions, though, if we get a nice solid close below the T-line, ideally with a candlestick sell signal. You know, maybe tomorrow we open a little higher and then close down near the lows, close below the T-line, do a bearish engulfing. That would just be awesome, and that'd be my signal to add to those puts or add to those you know, VIX calls. But currently just holding the same positions, although anxiously waiting to add to them if I get a good signal. Now that's the NASDAQ composite. Now let's have a look at the VIX, and I do like what I'm seeing in the VIX. So the VIX has clearly had a nice doji reversal there on Friday. I remember I pointed that out as a potential you know, reversal candlestick. We came up very nicely yesterday, got back above that daily T-line on the VIX. Today actually intraday went higher still, went as high as 22.02 on the VIX. Pulled back, but we're basically sitting on the VIX T-line now. And the VIX, you know, the oscillator here on the VIX obviously got nicely oversold. Now we're starting to come up out of that oversold condition. So it looks like the VIX is ready to take off. And if that's true, then that means equities are ready to sell off. Now, we'll look at the VIX tool quickly before I end things here. Now, VIX tool didn't really get the kind of clean divergence I would normally like to see, although you had a bit of a divergence. And now we did get above the red moving average on VVIX. In fact, VVIX really took off there, more so than VIX did even, at least initially. And remember, that's the implied volatility of VIX options. So obviously, some speculators are really pouring into the VIX options, which drives up the VVIX. Obviously, they're anticipating a larger move in VIX, and that's why they're piling in. And then after that, there's a bit of a delay, and the speculators pile into VIX options, or sorry, SPX options, like SPX put options, and that drives up the VIX itself, as that's really all the VIX is just a measurement of implied volatility on SPX options. So we have that. We have basically a nice break of the downtrend on VVIX and VIX. Didn't get the greatest divergence before that happened, although it's not essential. So we got above that, again, got above the requisite moving average on VVIX. Now we're just teasing this blue moving average on SPX to confirm the sell signal. We did get below it here intraday initially, and then we came up, and now we're basically just sitting back at that blue moving average on SPX. So a nice clean break, ideally tomorrow, back below this blue moving average, and a close below it, and obviously maintaining our trend above the red moving average on VVIX. All that combined, and we'll have a nice solid confirmed SPX sell signal using this VIX tool. So watching that carefully, eagerly waiting to add to some bearish positions, but still being patient for now. All right, so that's the update for now. We'll check in, well, if not later in the week, certainly on the weekend. All right, Serial Trader signing off.